How can a conservative investor invest 30 lakh rupees in August 2026 using the three pool strategy? This is what we are going to discuss in this video. And before getting into the details, I want to give this disclaimer that this is not an investment advice. This is just a overall framework of how we help our clients to allocate their investments whenever they are investing in a lump sum, or even when they want to structure their overall portfolio. Okay, so let's go deeper in this concept. So conservative investor doesn't really need to avoid investing a lump sum amount of money, but the bigger question is, how should the 30 lakh rupees be divided according to its purpose? Okay, so now for illustration, let's understand the three pool investment allocation. So the first pool or first bucket you can say is the liquidity bucket. This is extremely important to have this bucket, and this bucket can be either an arbitrage fund or a liquid fund, right? And this money is meant for needs that could arise in the near term. Okay, just like emergency requirement, unexpected family expenses, short term commitments. Okay, so the issue that a lot of investors face is that they invest the money thinking that they are going to invest for long term, let's say 8 years, 10 years or beyond, but there is some emergency that can happen to them, and then they have to sell their equity allocation. And if that time the equity markets are in a correction phase, then they will have to sell their investments in loss. So in order to avoid that kind of situation, we need to have a liquidity pool. Another benefit of liquidity pool is to take advantage of markets when they do give us opportunity during corrections. Because let's assume out of 30 lakh rupees portfolio, 10 lakhs is in liquid, and the market corrects 25-30%, you can potentially sell 5 lakh 6 lakh rupees of your liquid holdings and buy your equity mutual funds at a corrected level, and as a result accumulate more units of your mutual funds at a lower value, and hence enabling you to take advantage of the recovery that will follow after the correction. So that is the dual advantage of the liquid pool or the liquid bucket. Okay, so the objective here is not to chase high returns. Of course, in an arbitrage or liquid fund, you will get around 5.5-6% CAGR. But the objective here is to make your money available whenever it is required without having to sell your equity allocation. Now, the second bucket here is the stability bucket, and you can allocate 10 lakh rupees in this. Obviously, this again, I'm saying this is not like a model portfolio. This is just an illustration. You have to do the calculation for yourself based on your own scenarios. But as an illustration, you can potentially put 10 lakh rupees in this, and that can be a hybrid conservative portfolio, because as we discussed, this allocation is something that a conservative investor can consider, right? So hybrid conservative funds, typically they invest 70-75% of their portfolio in debt and remaining 25% in equity, and the taxation is also debt taxation. The idea here is to have little bit of equity allocation to generate alpha over pure debt funds, but majority of the portion will always be in debt in hybrid conservative funds. Now this is one category. There can be other category that you can consider for your stability bucket. The portion of the bucket of this money is required for some medium term family commitments or medium term goals that you have, let's say for 6 or 7 years, that you want to achieve. And here the focus is on investments that are relatively more stable and appropriate for the investor's risk profile and time horizon. The objective for this is not maximizing return, but to have a stable return which can be more or less predictable over a period of 6 to 7 years to achieve your medium term goals. So the objective is to take an appropriate amount of risk for the job the money is needed to perform. And finally, the third pool or third bucket is the growth bucket. Okay, so we invested 10 lakhs in stability, 10 lakhs in liquid. So the remaining 10 lakhs can be allocated to the growth uh, bucket. And this potentially can go into a hybrid multi-asset allocation fund or a dynamic asset allocation fund or a mix of both, right? So this bucket is basically for your long term goals, ideally above 10 years investment horizon. Even a conservative investor may need some exposure to growth assets. Why? Because inflation is also a risk, right? Today, the real inflation in India is around 8% to 9%. There are many areas like the medical inflation, education inflation, it can go upwards of 10% as well. So your portfolio needs to also beat inflation. So your growth pool can help you in achieving that objective over a long period of time. So let's say that 10 lakh rupees today will not have the same purchasing power after 10 to 15 years. So this is why we need to have some allocation of the portfolio to your growth, and that can be into pure equity if you are an aggressive investor, or into a multi-asset allocation fund or a dynamic asset allocation fund or a balanced advantage fund. Okay, so but being a conservative investor doesn't mean that you are taking unnecessary equity risk either. The amount of growth exposure should depend on your time horizon, your risk taking capacity, your risk tolerance, this is very much important, and your existing investments. So if you have some investments which are in equity, then you might have to uh, allocate the growth pool based on the existing investments so that equity doesn't overpower your portfolio, considering if you are a conservative investor. Okay, so what does this total allocation look like? So this is for 30 lakh rupees. Okay, so the total allocation will, okay, this is again, I'm saying do not replicate this, or this is not an investment advice or a model portfolio, but just an illustration where roughly we have given 10 lakhs to liquidity, 10 lakhs to stability, and 10 lakhs to growth. So the idea is to have 33, 33, 33% to all the three buckets, right? Uh, so here's the important part. These percentages are not recommendation, as I said. Okay, they are simply illustration of how you can think about your money in terms of different purposes that they can serve within your portfolio. Every allocation, every pool has its own purpose, and that will help you in your investment journey. So the real question the next time you will be investing is not which mutual fund you should buy, but the real question that you need to ask is what job does this 10 lakh, or in this scenario of our video 30 lakh rupees or 50, 60, whatever amount that you have, what is the job or the role that it has to perform in your life and in your family's life in the next 5, 10, 15 years? If you don't have the answer to that question, choosing the product first may be putting the cart before the horse. Okay. So a well organized portfolio starts with purpose of the money, defining the exact role that the money is going to accomplish in your portfolio. And after that, only your allocation should be done. And after that, your investment solutions or your actual mutual fund schemes or PMS AIF product needs to be finalized. Okay, and finally, the regular view is because your portfolio should change uh, when your lifestyle changes, so you need to have a regular review. At Oris Wealth, we do a review of our clients portfolios every quarter, every 3 months we do the review. Now in the review, it doesn't really mean that we keep changing the schemes, but the idea is to make sure that the investor is comfortable and is having an idea of what the portfolio is doing, and most importantly for us to make sure that the investments that have been done are on track as per the goals that we have defined for the clients, or the client has defined for himself or herself, whether those investments are on track or not. So these quarterly reviews help us and the client to understand that and stay on track. So a 30 lakh rupees portfolio doesn't need to be complicated. Even a 5 crore portfolio doesn't have to be complicated if you really know what is the role of every rupee And if we do it based on this 3 bucket portfolio, in fact, there is a 4 bucket portfolio also that we help our clients to construct. I will talk about that in the next video, which is a slightly more aggressive portfolio for growth oriented investors. But this is the 3 bucket portfolio that I wanted to discuss today. So again, liquidity, stability, and growth. You can allocate the capital this way, that will help you to have a structured wealth creation journey. And if you want us at Oriswell to help you in your and your family's wealth creation journey, then click the link in the description box below or visit our website oriswealth.com. We are personal investment CFOs for business promoters and corporate leaders, and you can book a complimentary, no obligation investment discussion with us. Just click on the link and fill out this form. It will take you less than 1 minute, and submit it, and we will get in touch with you for your investment portfolio discussion. And for more such finance related and investment related content, do subscribe to our channel. Thank you.